All right. Hello, everybody. Welcome back into the NASDAQ Options Superstars program. I wanted to get a video out here today updating you all on our open positions. We'll take a look at those, so where things are at, what are we expecting here going into Friday's session as well as into early next week. Then also cover some of the new trades that we're looking at here for Friday's session as well. Before we get into the charts, just quickly some housekeeping items. For those of you that are using the NetPicks app, right now it's only available for Apple devices, and some of you have noticed some strange things going on the last 24 to 48 hours. The issue there is we are working on getting an update to the app out. We've been slowly releasing some new features. You will start to notice some different looks on the app. Some of you have already noticed that. So if you notice anything that looks strange or something that's not working correctly, let me know. We're trying to address any bugs that are still out there. We've addressed most of them, so we're almost ready to get the release out to you all. So we're going to change the look and feel of some areas, just trying to make it a cleaner interface for you guys, make it easier to navigate through, find the information that you need. So that should be done in the next 24 to 48 hours. And then for those of you that are using the Android devices, we are in the final stages of testing there as well. I was hoping to get the app out this week. We did find a couple of issues that had to be addressed. So it'll most likely be next week, which I'm really excited about. I really appreciate all your patience if you're using an Android device. We are getting towards the home stretch. You can see that finish line there, and we'll get it out to you guys as soon as we possibly can. Right, so if you have any questions at all on the NetPicks app, let me know. Again, we'll continue to add and tweak features going forward. We want to continue to build on that in the months to come. Now, let's circle back to markets, and let's talk about why we're taking the types of trades that we are right now. We've talked about this in the last couple of videos, how you take a look over on the right edge of this daily chart. This is a daily chart of SPY. You can notice the movement that we've had intraday compared to what we have seen overall, a big picture. We've had some pretty big range intraday, but it has not translated into any type of a trending move that has developed. We've got a lot of back and forth going on, a lot of back and forth from day to day. As a result, if you're just going to buy calls and puts, it's going to be a struggle. This is not the time to swing for the fences. This is the time that you want to try to put on strategies that will allow you to make some money in a choppy, indecisive market. We're seeing this chop kick in because we've got news coming up out of the Fed. Are they going to continue their rate easing cycle? Are we going to have news out of the trade war with China? And because of that uncertainty, there's just been a lot of back and forth. This market's been very, very dependent on any headlines that come out. I point that out because the reason why we're using so many credit spreads right now is in this type of a market where we're seeing a lot of choppiness. This is a type of market that can lead to a large drawdown if you're not careful. If you try to force long calls and long puts to work, if you try to force debit spreads to work in all market conditions, it's going to be a struggle. Now, it'll shift. We'll see things break out. If we go back to the beginning of this year, if you go back into early June, you'll see trending type moves develop. We know it'll come. When you start to get into a market like this where it's back, forth, it's like that coiled spring pattern that we've talked about previously. When you start to see a spring coil tighter and tighter, at some point that spring is going to pop. And when it pops, you're going to get a decent sized move. Unfortunately, we don't know when it's going to pop, nor do we know in which direction it's going to pop in. We just know when it happens, it's going to give us a nice move. It'll probably come with nice volume. We have not had good volume here the last week. The last week on this rally back to the upside, it's been a struggle to hit 50 million shares on a daily basis. So there's not a lot of conviction on the upside. It leads me to believe that we've got another move lower coming. If we don't have any type of volume to speak of here on these moves to the upside, I think it's going to be difficult for this market to have enough fuel in the tank to drive us back higher. But of course, time will tell. We'll have to wait and see, and we're very committed to taking what the market is giving us. So you'll probably see a shift here in the next couple of weeks. If we start to see this market break out, we'll adjust accordingly. We could potentially look at some additional weekly options. We might look at some more long calls, long puts. So we'll certainly take what the market's giving us. Now, I posted a couple of alerts this afternoon. And they weren't trade alerts. They were just updates on what I was looking at. And I mentioned that I wanted to be cautious going into tomorrow's session. We ended up not initiating any new trades today. We've got Fed Chairman Powell speaking at 10 a.m. Eastern time tomorrow morning. Markets were in a wait and see mode all day long. It was a very, very slow market, a lot of wait and see for what he's going to say tomorrow. As a result, I didn't want to push it. I didn't want to rush into trades knowing that, potential move is going to come tomorrow morning. I'm okay holding open positions. I just didn't want to add to those positions here today. And we saw some nervous trade into the close. I mean, we saw a rally up from around 315 or so till about 350. So we saw about a 30 to 40 minute stretch there where we rallied up. And then in the last 5 minutes, you can see we saw a pretty decent size sell-off there. We saw the SPY, we saw it sell off about $1. There's some uncertainty, there's some fear that came into the market right at the close. Now, is it because of the Fed chairman speaking tomorrow? Probably, but we'll just wait and see what happens. It just kind of backs up my decision to not initiate any new trades here today. All right. Let me drag the spreadsheet over. For those of you that are newer to the program, we do update our position sheets both on the owner's website as well as inside of the NetPicks app, and we do that every day. So throughout the session, if we take a trade off, if we initiate a new trade, we always post those updates to our position sheets so you know exactly where we're at on every trade from start to finish. So if we come to the position sheet, this is the spreadsheet that is on the owner's website. We do separate them by trade type. That way it's easy to find the trades that you're looking for. And we're looking at the short call spreads that we have on here now. Like I've talked about in previous videos, the key to this part of the spreadsheet, if you're looking at a short call spread, we list the exact position that we have on. The first strike price listed there. So on CRWD, it's the 100 strike. On Chewy, it's the 35 strike. On Pinterest, it's the 35 strike. That first strike price listed there, that is our line in the sand. A short call spread is a neutral to bearish position. We want those stocks to head lower. And the key is we make money as long as those stocks stay below the first number listed, the first strike price listed there. If price action stays below that level, we're going to make money from time decay adding up, from volatility decreasing. The whole goal is for those spreads to get as cheap as possible, as quickly as possible. That's how we make money. Our goal is to buy those spreads back for as cheap as possible. I will always post the target levels here as well. So you'll notice on each one of these short call spreads, you'll see a target range. That range of prices there, that is where I'm looking to buy the spreads back. If I can buy the spreads back anywhere inside of that range, that is acceptable. And we calculate that range. Our target zone on a credit spread is when I can buy that spread back and keep 50 to 75% of whatever I collected to put the trade on. So if on CRWD, we collected $1.65. If I can buy it back for between 41 and 82 cents, that would give me 50 to 75% of whatever I collected to put the trade on. You can place those closing orders right when you put the trade on. You can create those buy orders to close out of the position. Anywhere inside of this range, I would start it out. If you're creating a closing order, start it out at the lower price. And then adjust from there. We will always issue a closing alert as well. When we're taking action on our side, you guys will see the alerts come out. I will not leave you hanging. So you'll always be in the loop from start to finish on every trade, but I do post those target levels there for those of you that might have a busy schedule. Maybe you can't track the markets all day long. Maybe you can't always be available when I send out the trade alerts. I post those target levels. That way you can get orders in place if you feel more comfortable with that approach. So let me go ahead and drag the spreadsheet off to the other screen. And let me go over to the trade page. Let's start out with CRWD. And I believe I have this order saved in here. So let me just try to pull these up and we'll just quickly go through these. We sold the 100-105 call spread. This is out in the September monthly cycle. We collected $1.65 to put the trade on. And we're basically sitting right there. We're basically unchanged on the trade. Now, I've had some questions on this. Why aren't we making money? We sold the 100 call, so we want price action to stay below 100. It's at 93. It's just under 93. Why aren't we making money here? Because when we put this trade on, the whole goal, we make money faster if the stock moves lower. Any type of a downside move, that would help the P&L work in our favor faster. If we don't see a big move lower, which we really have not, we've basically just seen CrowdStrike kind of move sideways since we put the trade on. This turns into more of a play on time decay. As we continue to move closer to expiration, we've got expiration 29 days from today. As we get closer to expiration, that time decay is going to start building in our favor. As it does, the P&L would become more responsive for us. We don't need to do a single thing with this trade. As long as price action is below $100, that P&L will continue to move in our favor. Right? So it takes patience. Certainly, this is not going to be a fast-moving trade. And we're seeing that because, number one, we went out farther in time. We went out to the monthly options. We put on a directional trade, but we have not had a directional move yet. So it takes more time to let this thing marinate. Don't be alarmed by that. Don't get concerned by that. Over time, the numbers will absolutely play out in our favor. So there's nothing we need to do here other than just continue to hold the trade and track it over the next few weeks. Chewy, we sold the 35-37 call spread, and this is also in the September monthly cycle. We collected 65 cents or $65 per spread to put this trade on, and it's now trading for 40 cents mid-price. We've got about a $25 profit per spread on this trade. My goal is to buy this thing back for between 16 and 32 cents. Any type of a move lower here over the next few days will greatly improve our performance here. We may end up being able to close out of this position. If we get any type of a downside move market-wide, there's a very good chance going into early next week we could go ahead and close out of the position. We need price action to stay below 35. That's our short strike. Right now, price action is just below 31, so there's nothing we need to do on this one either. We'll continue to hold it and see if we can book that 75% of max profit here into the next week or so. Pins. This is Pinterest. And we also sold the 35-37 call spread. We collected on this trade 64 cents. It's now trading for 90 cents mid-price. So we're down about 26 cents, $26 per spread on this one. Here's the key. We've got this on in the September monthly options. Those have 29 days left. We need price action below 35. That's our short strike. Right now, the stock price is at 35.43. I need a 43-cent sell-off over the next 29 days. Is that doable? It absolutely is doable. We can see Pinterest. I mean, you can see it moved over $1 today. You can see a 43-cent move very, very quickly. With a credit spread, much easier to hold these positions longer. They're more forgiving. They allow us to recover faster. Any type of a move to the downside will help us here. As we continue to hold, the time decay is helping us. Okay, so there's multiple routes that we can go to make money. There's nothing I need to do here. No adjustments need to be made. We're still very, very close to being right on the dance floor. Nothing we need to do here as of yet on Pinterest. We'll continue to hold. We've got a couple of different VXX positions on. And VXX, for those of you that are not familiar with it, it is the volatility ETF that we like to track. And we've got two different positions on. The first one is we've got the 27.29 call spread. We sold the 27.29 call spread using the September monthly options, and we collected on this one 53 cents. We've got about a $5 profit per spread. We were early on this trade. We were underwater for a good week or two after we put this trade on. It has started to battle back for us. So we are up 5 cents on this position. With 29 days left, I still like volatility moving lower. We just know historically that's the pattern that tends to repeat. As volatility gets elevated, it'll tend to stay that way for a couple weeks and then retreat back lower. And I'm fully expecting that to happen yet again. So nothing we need to do here either. We need price action below 27. It's at 25.75. So if we sit right here, I'm fine. If we move lower, we can work with that. If we move slightly higher, I've got about a $1.25 cushion here above us. We can be dead wrong by about $1.25 and still make money. The only move that hurts us is a move above 27. So nothing to do on VXX either. We just have a small profit there at the moment. The second VXX trade, we have the 28.30 call spread on, and we collected on this one, we collected 49 cents. Price action trading for 40 cents. We've got about a $10 profit on this one here for the time being. I need price action below 28. It is. We're at 25.75 on VXX. You can see it in the upper portion of the platform. So as long as we stay below 28, we can make money on this one. No reason to make any adjustments here. We just let the trade work. We'll continue to stay patient there on VXX. The last short call spread that we have on is on Amgen. And this is a trade, one of our newer trades. We have the 207.5, 210 call spread that we sold, and we collected 91 cents to put this trade on. It's trading for 98 cents, so we're down about 7 cents or so, $7 per spread. We need price action below 207.5. It is. It's at 203.5, so we're okay here. We can continue to hold as long as price action stays below 207.5. We're okay. Now, the beauty here is notice as I go through these updates, I am not showing any charts here. Once we get these credit spreads on, we don't need to look at charts. I'm not looking for a specific stock price to hit. They're very forgiving trades because all I need to do is make sure price action stays below our short strike. And on a good majority of these, we're sitting okay. The only one that we really need some help on at this point is Pinterest. And we're really not even that far away on that one either. So we're sitting okay on all the short call spreads. Let's move on over to the short put spreads. We've got 4 of these on. The key here, just like the short call spreads, I list the exact position. And the first strike listed there, that is our line in the sand for all of these. We need price action to stay above those strike prices. Those are the strike prices that we sold. So Workday, I need it above 180. Square above 60. Xilinx above 99. Uber above 34. So that is the range, or I'm sorry, those are the numbers that I need to see price action stay above. Just like the short call spreads, I give the target ranges as well, just in case you wanted to get some closing orders working ahead of time. You can do that. I will always let you know when we're taking action on our side. When we're creating a closing order on our side, we'll let you know. So you'll always know what to do from start to finish on every trade. So let me drag that one over and walk through these trades really quick. So let me get WDAY up. So on Workday, we sold the 180, 177.5 put spread. I need price action above 180. It is. It's up at 193. So we're sitting okay on this position. We sold it for 80 cents. It's now trading for 45 cents. We've got about a $35 profit per spread on this position. We're targeting between 20 and 40 cents. We're getting very close to that desired profit range. I'm looking to close this thing out around 20 cents. That's our goal. So we're getting closer. The next few days, any type of a move higher on Workday, we'll be able to close that thing out for a nice profit. So you should see an alert come out from me here. I would say between now and middle of next week, we should be able to make some progress on this thing into a target range. So we're sitting okay there. Nothing needs to be done at the moment. We're in a partial profit. Square, symbol SQ. We sold the 60.58 put spread and we collected 54 cents. It's now trading for 28 cents. We're right there. We're right at that 50% of max profit. My desired profit range is when I can buy that thing back for between 13 and 27 cents. We're right there. If you wanted to create a closing order for tomorrow, if any type of a higher open tomorrow, you may be able to close that thing out for a 50% of max profit. So we need this thing above 60. It's almost up at 65, so we've got a nice cushion here. I'm going to hold on a little bit longer. We'll take a closer look at it tomorrow, see if we can book a partial profit, but sitting okay there on Square also. Xilinx. Go ahead and pull this one up. This is XLNX. We sold the 99.97 put spread, and we collected 60 cents on this one. It's now trading for 43 cents. So we've got about $20 of profit on this one. I'm targeting between 15 and 30 cents. If I can buy it back for between 15 and 30 cents, that would be acceptable. So we're sitting okay here. We got a partial profit. Today didn't really help us. I was hoping for a move higher. We didn't get it. We were down about $1.66. So that didn't help our position today, but we're still in a profit. These are very forgiving trades. That's the beauty of using credit spread. So we've got a nice profit on it so far. If we can get one more push to the upside, we'll be able to close that thing out and book a nice profit. Uber, this is the true new trade from yesterday. We sold the 34.32 put spread and we collected 63 cents. It's now trading for 75 cents. We're down about 12 bucks on this one. We need it above 34. We closed right on top of 34 here today. So we have it on with the September monthly options. We still have some time left and need Uber to bounce higher. It's still very oversold, so I'm looking for a bounce here. Still like the trade. We'll continue to hold it here over the next few weeks. So the only position that's really giving us trouble, and it's really not even that bad, is Pinterest. That's the only one that we really need a reversal in our direction. The other ones are sitting okay. They're doing what we need them to do. Even though we haven't had big directional moves in these stocks, The time decay. That's why credit spreads are so powerful. They're very forgiving trades. Are you ever going to have 1,000% winner on a credit spread? You're not. That's not the design of the trade. The design of the trade is to generate some consistent income in a period of choppy, indecisive price action, which we're seeing right now. Now, some of you still have the Beyond Meat trade on. Let me go ahead and pull that one up. I'm one of those people that still has it on. So we bought the 160, 155 put spread. We bought it for $2.73. We've got about $120 of profit on this one so far. I have my closing order in at $4.70. This one expires here next week. We'll most likely be taking action on this thing either tomorrow or Monday. I'm looking for a move lower. It's just the markets are really wide. It's been difficult to get fills. Those of you that have gotten fills, nice work. Congrats to those of you that have gotten fills. I have not. I know many of you haven't either. So we'll continue to let it work. We've got a profit. We need price action to stay below 155. It's at 151. So we're sitting okay here. We'll see if the markets start to tighten up a little bit, see if we can get filled. So I saw my closing order working. If I would say between $4.50 and $4.70, that would be an acceptable range to close the trade out at. I've got my closing order working at $4.70. So this is a long put spread. It's a bearish position on BYND. And then finally on AMD, this is also a trade from this week. And I believe I've got it in here somewhere. There it is. So we bought the 32 put in the September monthly options. Unfortunately, this thing has not moved lower. The market has seen a pretty nice rally here the last couple days on AMD. We bought it for $2.34. It's now trading for $1.64, so we are down money on this. My stop is at $1.17. If we hit $1.17, any type of a higher move tomorrow or even into early next week, we'll go ahead and close the position out. We like to limit our loss at 50% on any type of a long call, long put. So we'll continue to track it. We need price action here on this one. We need it to stay below 32. That's the goal here. So any type of a lower move tomorrow and early next week would help us recover a lot faster. So bottom line is we've got a number of open positions here. A lot of them are with credit spreads. I'd like to use those more often than not because they are very forgiving, especially in this type of a market. So a couple of new trades that we're looking at for Friday's session. Let me go ahead and pull up some of these charts a second. EA, this is Electronic Arts. We've got this long setup here. Okay, we had our sentiment indicator go from red to green, put us into a bullish mode. Price action actually did hit the entry. I held off on this so far, waiting to see what the Fed does tomorrow. But if we can still get in at that entry point, right around that 94.50 level, that's what I'm looking to do. And we'll either look at some long calls or a long call spread on EA. So that is one of them on the docket. Let's see, just taking a look at my list. And I may have to go over to, I have Amazon. Let me take a look at Amazon here a second. So Amazon, we've got our pulse indicator plotting 3 out of the past 5 bars as yellow, indicating we're between a 1 and a 2 standard deviation channel move on the downside. For those of you that are new, what that indicates to us is that we are oversold in the near term. It does not mean Amazon can't move lower here. It just means it's not probable. The chances of us seeing a big move lower here, they're lower. Chances are we're going to see a period of consolidation or even a move higher. Notice what's happened to price since those yellow bars started to print. We have basically just moved straight sideways, right? It's a very typical pattern when you start to see extremes, and we saw an extreme on the downside. I'm looking at a potential short put spread on Amazon, looking for a continued period of consolidation or even a bounce to the upside. So Amazon short put spread is on the list for tomorrow as well. Couple other ones here. Let me load up my other workspace. Just give me a quick second to pull these up. Let's take a look at Monster, MNST. Same story as Amazon. You can see a whole slew of yellow bars on the pulse indicator indicating that we are oversold. We're between a 1 and a 2 standard deviation channel move on the downside. It means for a continued move lower to happen, it would have to be more of an outlier type move. Chances are the probabilities favor either a period of continued consolidation or even a reversal to the upside. So a short put spread on Monster is also on the list. And then finally on ATVI, Let's see. I may actually have it on over on my other list. So we'll just take a look at Marriott. So on Marriott, we have this short trade that actually triggered in, very similar to EA. We have this short trade. It actually hit the entry point. I held off on issuing the alert here today because of the Fed news out tomorrow morning. But this one did print. We got those pink dots there because the sentiment indicator went from green to red. So we went from bullish to bearish mode. So that's another one on the list. So that does not guarantee that we're going to get setups and issue trade alerts on these names tomorrow. A lot can change overnight. A lot can change pre-market tomorrow. We'll certainly take a close look, see what the Fed does tomorrow morning, see what Chairman Powell does to the market, and then the goal is to get 1 or 2 new trades on here yet tomorrow. So when it's time to take action, we will certainly let you know. If you have any questions on open positions, any questions on the NetPicks app, or anything new that's developing, let me know. You can either post a message here inside of the app, you can post a message inside of Slack, or email me directly, mike@netpicks.com. So I'm going to wrap this video up here. Enjoy your evening, everybody, and I'll be back with you on Friday as we wrap up the week.